All right, guys, welcome to my first live stream in quite a long time, and I decided to change things up here on the channel. This will be the regular format now that you will see here on the channel, as it's just way more, well, easier for me, way more simple to keep things on track, to keep you guys updated, to go through the charts when you need to see them, and obviously it takes out the whole editing process and everything, and therefore I can give you the data that you need to see and the charts that you need to see when they're actually happening right now. So right now we have some serious action in the charts. There's some key levels that I want to look at. You can see it in the title already. We're looking at it from a pessimistic perspective, optimistic perspective, and then try to find the middle as a realist, right? To see exactly what we can prepare for into either direction to take the opportunities that show up in the charts. So that's the main thing that I want to focus on. And before we get into the charts, there's some stuff that I want to cover here on the channel, and some news on the channel as well that I need to share with you guys. For that, let's go straight into, well, actually, let me just set some stuff up here before we get going. And yeah, guys, if you're enjoying this format, if you want to see more live stuff, then get down there right now, smash up that like button. And hey, if you watched a few minutes or the whole analysis, hopefully, and you enjoyed it, then consider joining us here in Team Crypto Unhyped if you haven't done so already, by hitting the subscribe button and all the good stuff. And it really helps me out with the algorithm. Of course, I've been absent. I have not been posting a lot here on YouTube. Therefore, we really need some help with this. And guys, I'm just gonna set some stuff up here before we really get going, give some people a chance here to join us as well. And then, of course, the video here will also be available on demand afterwards, after the stream, in case you missed something or you want to rewatch it. Or, of course, share it with your friends and family and everyone who needs to know about this really exciting and important time here in the crypto markets. And yeah, guys, it's been boring forever. I completely agree with most of what I read from you guys in the comments and DMs that I get about how boring the market has been. But of course, now it is not the case anymore. So guys, one thing that we need to cover today is, of course, the brand new Unhyped data sheet, which will be updated every Sunday at 12 p.m. Central European time. So you can look whatever that means for you time-wise, but that will be updated every week. And there you're going to have the macro data to watch for the upcoming weeks, all the key events. Of course, last week, nothing major was happening as, of course, the government shutdown delayed all the big reportings. The NFP, the non-farm payrolls, the jobs report, the CPI, the PPI, the retail sales, all these numbers were delayed. And of course, we have now heard that this week the big jobs numbers will come out. I will get into that in a second. So here, this was released on Sunday. So of course a lot has changed since then as far as the Bitcoin numbers go and everything, but these numbers here are still current. You have a link to this down in the description. Then all you need to do is drop your email and it will get sent to your email right away. And of course, guys, here you also get not only the key Bitcoin levels, you also have on-chain data like the Bitcoin Fear and Greed Index. Then, of course, also a very, very interesting signal for all of you guys, and I will talk a lot about it in the future, is the SOPR, Spend Output Profit Ratio. And that basically shows you what the average seller now in the market is selling for a profit or loss. And that gives you a good idea of where the market is at. And yeah, guys, I'm not going to go through all of this. I covered it here for you. You can just go over into the description down below, or you can also find it in places here like on X, right at the top of my profile. There you see it. And here you also find all my latest updates and everything. I'm getting really active on all the platforms again. So guys, here you have this, and then you have the key data coming up this week, which is really important. The government shutdown is over, of course. All the data has been delayed, and that, of course, brought a lot of uncertainty into the market for investors. Investors didn't really know what to bet on, whether the market is going up or down, because we, of course, lacking the key data. And if we look at Polymarket in a second, you will also see what we had priced in just days or a couple of weeks ago here for the interest rates in December and how that has changed. And now we see that on November 20th, on Thursday, yes, we have the initial jobless claim. That is, of course, the benefits that have been collected in the US. Then the non-farm payrolls, a massive indicator always for the Fed about how the economy is doing due to from the angle of jobs as well. Then we have the unemployment rate and the existing home sales, all really key indicators for the Fed on what to do in the coming months. When, of course, on December 10th, we're awaiting the next Fed rate decision. And of course, the Fed also announced that next month quantitative easing is starting, which of course historically is always great for Bitcoin and risk on assets. And here we can see that, of course, we are expecting that 50K jobs have been added last month here as far as the non-farm payrolls goes, and the prior was 22K. So these numbers actually, when they come out hotter than expected, that we see, or cooler than expected, that less jobs have been added, that puts pressure on the Fed, and then they're more inclined to cut rates. And talking about rates, so when it comes to jobs, the worst performance is better for risk assets, as it puts more pressure on the Fed to cut rates. Just as a rule of thumb, and you can really get into all the details with all these, of course, unhyped data sheets that are coming out weekly now, where you get all this information and everything else that's really relevant as catalysts for the Bitcoin price. And of course, the key price levels for Bitcoin here on the monthly, weekly, and daily chart. Now, talking about interest rates, we can see here that the odds now for a cut by 25 basis points in December is 50%. That is, of course, reflecting the entire market right now. If we go down here, odds over time, right? We see the orange line, that is 25 basis points. And then we go here to October 27th, October 28th. The odds for 25 basis points cut was right at 90%. So it dropped by 40% just because of the massive delay, of course, that was caused by the government shutdown as far as the reporting for all these key numbers go. So keep that in mind. That is very important, that this is now over. A lot of key data is rolling out on Thursday. And then, of course, the big main event next month, after the Fed finally caught up with all this data, is the rate decision on December 10th. And of course, I'll keep you updated on everything, not just here on YouTube, also over on X and all your favorite social media platforms. By the way, guys, I was planning to stream this here also over on X, but we had some technical difficulties. I mean, I'm brand new to this, so cut me some slack. Nonetheless, you can find the links to the YouTube stream over on X as well. I'll make sure to update you on everything. Right, guys, now let's get into it. Starting out on the weekly chart here for Bitcoin. We're just looking at Bitcoin today. We're not getting into any other charts. These are the key things that I want to cover today. And of course, it's the pessimistic scenario, the bearish scenario, then the bullish scenario, and then what realistically we can expect out of all of this. So right now we can see we came down to a major support level here. We take the Fibonacci retracement from the April lows to the current highs. And there we see we're hanging on to the 61.8, which is in perfect alignment with the prior range lows here, where we printed these tops from December and January here, the new all-time highs. And that's what we're hanging on to now. Key horizontal level in alignment with the 61.8. So, of course, if we set up here now for a reversal or an attempted reversal or continuation of the trend, if we look at it on the monthly chart, for example, then we can see here that is the most optimistic chart that we can find because we, of course, still have a bullish structure. If you go into lower time frames, you can see that most structures have turned bearish, anything below the 2-week chart, really. And there we can see here really that this is a very clear bullish structure with a low and then a higher and a higher low and so on. And we're still holding the prior low here, therefore clearly still in a bullish structure. Then if we go back to the weekly chart, we can see that things are looking different there. Of course, we have a lot more structure points here. Here was the last higher high that we printed, and then we tried to hold the previous low here to continue upwards, and that was the key spot where it broke down here, brought us down to the ever so important 50-week SMA, which of course is the absolute key indicator that everyone is looking at to identify always whether we're going down into a bear market or we're finding a bounce to continue in the bull market. And there we can see also very clearly here, let me just adjust this trend line, that of course from this perspective here, we lost the trend line at the same time that we broke below the 50-week SMA, close below there, and now we're here at this key level. Next level up, if we lose this now, here's of course this massive range down here. We can see the larger Fibonacci retracement, which I'll get to in a second as well, as it serves as a very strong historic indicator for the bottom for Bitcoin and bear markets. And I'll get to that. There's a strong combination between the 200-week SMA and the 78.6 that usually has been very, very accurate. But now the setup is slightly different this cycle due to the very strong bullish structure in this cycle and very sustainable structure compared to previous cycles. So the next level up then here is down there, this key horizontal, this key Fibonacci retracement that we said, coming down from the bear market lows all the way to the current top, lines up perfectly with the smaller retracement coming from the April lows to the current top here. There we see the 78.6 and the 38.2 here, right at $85,000, and that lines up here also with this strong range where we then of course printed this low here back in March and then rallied up here to continue up towards new all-time high after we revisit the 50-week SMA and establish this trend line here. So key area down here, if this currently doesn't hold, then we get down here. Now the bullish scenarios, of course, that we get a bounce from here, reclaim the prior range, get back above the 50-week SMA, confirm support above the 38.2, above the 50-week SMA, and then here trade sideways to get another shot at the 8-year resistance. This is, of course, a resistance that we looked at here on the channel, well, throughout this entire bull market, basically, since I started posting videos here. And there you can see that we're connecting the tops from 2017, 2021, and that is the exact spot now where Bitcoin got rejected and of course broke down from there. Couldn't hold the range up here. You can see we've been trading sideways here between these two yellow lines basically on a closing basis for 4 months, and now clearly here in November we broke down, but nonetheless we're still holding the structure here. Very important. Now, if you go back to the weekly, then we can see here, if we get a bounce here now, then of course, it's more likely that we get an underside test here. We have an extremely strong cluster of resistance here. This key horizontal where we're connecting the tops from December, January, where we printed these two all-time highs, then the lows here from June, and then of course, the 50-week SMA, and then this cluster of Fibonacci levels where we have the same two Fibonacci retracements that we just looked at. There we have the 23.6 and the 50, all lining up here in the area between 103 or 104,000 and $100,000. So here, this is a great opportunity if we get a rejection there to exit the market. If you have missed it, right? At this point, of course, guys, I got to also mention this is not financial advice. All the content on this channel is purely for educational and entertainment purposes only. But if we do get back up there, then the likely scenarios here that we find a rejection, an underside test of the 50-week SMA and the prior trend, and then it's very, very important that you focus on this area, whether we can reclaim the support here, get back in there, and confirm it as support, then that's of course the bullish scenario. The bearish scenario is that we get a rejection here and we then come back down. And then if we look historically, that has been a very, very good strategy in case you didn't exit the market completely, didn't manage to take out all your positions, and now you're stuck basically and you're looking for a better spot to exit. So if we look back here, let me just go into logarithmic, makes it easier to show you guys. There we can see that after we lost the 50-week SMA, historically we always return to it. And then we can see here, for example, back in 2021, we set up here a spinning top right at it and then followed up with a bearish candle. So nice opportunity here to exit the market. There we see also the 38.2 lined up perfectly with the 50-week SMA. Here we have the same thing here, although on the smaller Fibonacci retracement, we're retracing here from the April lows to the current top. But there we also had a strong cluster here from a horizontal perspective, a very strong level. Then the 50-week SMA, the 38.2, giving us here a very, very strong resistance and an opportunity to exit the market, right? Or to start shorting the market here, depending on where you are at currently with your positions and your strategy. Then we had the same thing here again in 2017, right? Rallying up here, holding the 50-week SMA. The moment we fell below it, we got an underside test here, also aligned here with a key horizontal level. You can see a prior support and resistance, very strong. And then also the 61.8 on the Fibonacci retracement of the entire bull market retracement. So these opportunities always show up, or not always, well, but historically here in the last 3 cycles, we saw that this happened, or at least in the 2 prior cycles. And therefore, here in this 3rd cycle now, we can expect this to happen once again. Now, from a price action perspective, we can see that Bitcoin is now currently trying to set up a hammer here, but of course we still have 5 days left on this candle. And if this hammer gets set up and gets followed up with a bullish candle, then of course a very strong indication of an attempted reversal. And then we got to keep our eyes out here in the 104 to 100, even to $106,000 range, right? To see if something develops there as far as a rejection goes, or if we can reclaim the 50-week SMA. That then, of course, a very, very strong sign that we continue bullish. But first, we also have to reclaim that lost range here and confirm it as support again above $108,000. So guys, now let's go to the bottom indicators here and my predictions for this cycle's bottom. If you're enjoying this right now, of course, guys, I'm not going to lie here. Bit nervous with these live streams as I don't even know if it's working, if you can see everything, but I'm hearing from the other room that you can, so that's a good sign. And then of course it's very different than just recording, editing, and putting out the content, because everything is happening live. So yeah, I also got to figure out how to talk to you guys in the comments and all that. So yeah, cut me some slack if this is not as professional as it's supposed to be, but this will be my standard platform now, my standard way of putting out my content. So promise you guys, it's only going to get better from here. But yeah, let's get down to this now. So of course, if you're a long time watcher and subscriber here on the channel, you know that I've been very close to calling the exact bottom in 2022, when I told you guys in spring about my bottom prediction of $17,500. And that was based heavily on the 78.6 Fibonacci retracement level and the 200-week SMA. So if we look here, 2017, for example, we take here the bear market lows from the prior cycle to the $20,000 top. Then we can see that if we take the Fibonacci retracement from there, we can see that Bitcoin fell below the 78.6 on that Fibonacci retracement, came down to the 200-week SMA. Of course, that setup always depends of where the moving average is at. This is, of course, on a high time frame, not a moving average with the bullish trend that Bitcoin's been in since existence, basically. You can see that this has never started flattening out or turning down. It's always been going up. So the dynamics of this indicator combining with the Fibonacci retracements are going to change, as well as the market dynamics have changed overall for Bitcoin, especially in the cycle, something that I spoke a lot about. But yeah, this area here served me as a indication of where the bottom could be last cycle around, and there I call it at 17,500. We came down there exactly on the spot, basically here, right on the 78.6 after falling below the 200. Here you can see the difference in the setup, right? Here we had the 200 below the 78.6. As it's been moving up very steeply, the 200 is above the 78.6, was closer to the 61.8. And that resembles basically what we see in the charts right now as well. And there we can see that we came down to the 78.6, and this here, it looked like we bottomed out. Most people expected the bottom to be in back then, but then of course FTX happened. We fell below the 78.6 down to around 15K, and then started rallying up from there, putting in our current cycle top here. So if we look at these two indicators now, you can see that the 200-week SMA is here right in the mid-50s, right at 55,000. Of course, that is a lagging indicator. It's an extremely strong bull trend overall, and therefore we can expect this to continue going up here. And then depends, of course, when we get there, where it will be at. But there we see here's a very strong cluster in this area between $55,000 and $60,000, where we, of course, take the tops from the prior cycle in combination here also with the 23.6 of the prior cycle. Then this here also served as massive support here during this cycle when we came down here to the 50-week SMA the first time around and started establishing this trend line here. And then, of course, the 61.8 on that Fibonacci retracement where we're retracing the entire bull market, all lining up here in this area. So a very logical support. Historically, though, Bitcoin has always fallen below the 78.6 on the Fibonacci retracement. If that trend continues, then we can expect Bitcoin to go all the way down into the 30s. Of course, it's hard to guess, and I'm not someone who ever recommends you to do knife catching and just to guess for a level and then to go all in there. And therefore, you see that here the structure is very clear and very strong and connecting a lot of historic structure points as well. Therefore, a very, very nice setup here for a DCA strategy to break down your buy orders in these areas here and continue buying at lower prices to then have a nice average price for your overall Bitcoin purchase price when the bear market lows are in and when the next bull market starts, if it doesn't continue now, of course, then to have a much better returns in that bull cycle. So that's the best strategy that you can do. Exit strategy, try to catch that rejection on a rebound here, on an underside retest, and then DCA back into the market to average out your position to a much lower price to have then much bigger profits in the next bull cycle. These are the main things that I wanted to cover here on the weekly chart. I'm going to focus fully on price action today, and then in the next stream, I don't know if it's I think it's going to be on Thursday. I'll update you with my schedule as well. As you know, guys, I've been trying to launch my comeback here since September, but of course, as you can imagine, with my views and my subscriber count here on YouTube, this is not my bread and how do you say, bread and water yet. This is not where bread and butter, sorry. This is not where I make my money. I have other stuff going on as well. Of course, I'm a professional trader and I also have a lot of other stuff going on that I need to take care of. And therefore, I had to put this a bit on the back burner. But then we've been talking and we decided here now to go with the live videos. And this is just way more sustainable for me to bring out constant content and to also, of course, repurpose it with the important clips that you guys need to see across different social media platforms, Instagram, TikTok, and so on. But yeah, guys, main things here for the weekly chart, expecting a bounce somewhere here between the 93 to 90K area where we are at right now. And if we go a bit lower, then I'm expecting a very strong reaction from the $84,000 to $85,000 range. And then we got to keep our eyes open here at the $100,000 to $103,000 range, or even slightly higher than that, to potentially spot a attempt here at a reversal, which historically has always ended up in a rejection and a great opportunity to exit the market and start shorting the market. Right, guys, now down to the daily chart. Another really interesting chart where we can see a nice hammer setting up here, right? Of course, we're coming out of this key weekly level here, which we just saw on the weekly chart. We'd lost the 61.8 on the Fibonacci retracement, same Fibonacci retracement as the smaller one that we also saw on the weekly chart here. And there we see that we still have some room here to the downside as well, to the 78.6, which of course aligns perfectly with this range here, therefore the next logical support. Now we can see here that there's also, of course, a great opportunity here to catch an underside, to catch either a long towards an underside test of this range here in the $101,000 range. That is, of course, then there we would have the 21 EMA here. Then we have the 50 on that same Fibonacci retracement and the prior range lows here on a closing basis. So a very strong resistance cluster here. And then if we look at that area above there, that is the key area here to spot an actual first attempt here at a trend reversal. So that's the key pivot point right up here, right at $106,200. There we see the 38.2 on that Fibonacci retracement. There we also see the two moving averages that just printed a death cross. Actually, we see that the 50 EMA here has fallen below the 200 EMA. And these are all lining up in that area as well. So if we now make a move up there here, get through the underside test in the $101,000 range, then of course this is the logical point where we can expect very strong resistance to come in here, right at $106,500. If that gets broken, Bitcoin gets back above there and confirms support above there, then that is extremely strong and extremely bullish. And if that then drifts over into the weekly chart and we can reclaim the 50-week SMA there on a closing basis and follow up with confirmation and volume as well, then of course that is very clear that things have changed in the charts, and that this indicator that everyone is looking at, the 50-week SMA that had a 100% hit rate historically to identify whether we are in a bull market or bear market, that will get changed, and that script will get flipped. Let's put it that way. I spoke about it previously. I told you guys, nothing in the charts will ever remain 100% as far as indicators go, right? A 50-week SMA has a 100% hit rate, but we're looking at an extremely young asset. And on such a high time frame, a 50-week SMA just doesn't give us enough data points to say, well, this is rock solid, this is going to be 100% forever. Eventually, it will happen that we will close below the 50-week SMA, rally back above, and continue in our bull market. And keep in mind, the bull market structure here on the high time frame is still intact. And here, actually, from a support perspective, we're right on the edge right now. On a closing basis, we want to close above here, and then, of course, reclaim that range that we spoke about earlier. So very, very key here to keep an eye on that. And right now, another opportunity is showing up in the charts. I think we have it covered here for the daily charts. All the key levels, as far as support goes below us, of course, come from higher time frames, as we just covered on the weekly chart. And the key thing that we can see now in the charts happening right now is that we have our first underside test here on a major time frame. Of course, the 4-hourly chart. I already circled it in for you. This is the key area. Once again here, we're coming out of this key weekly level here. And now we can see that we're undertesting the prior range lows here on a closing basis. There we take the Fibonacci retracement of the current local downtrend here from the top to the bottom. There we see the 23.6. We also see the 21 EMA, and then also the dynamic trend line here, resistance line here in this current local downtrend, all lining up here in this area between $93,000 and $94,000. And then, of course, the next thing here, if we could break this now, is to reclaim the area above there. The prior high here in this downtrend, the exact pivot point, if you want. There we see that that's the prior high here in the downtrend, lining up with the prior dynamic dynamic support line of the falling wedge pattern that we've been trading in since the last all-time high. You can see a very solid support line. That has also been the key resistance line here, where we got rejected here for the last few days. So that's the key area that we want to get back above, and there to clear everything, to get above that trend line and everything. We also want to get above the 38.2 here on that Fibonacci retracement, right at $96,200. And that's where it gets interesting then, because that of course brings us closer to the underside test here on the daily chart. And then if we managed to get back above first the 4-hourly chart, then the daily chart, can reclaim support there, and then get back above the week and close above the 50 on the weekly as well, then of course this could have been a massive trap. Of course, right now the likeliness is that this trend continues. We can see that the structure is broken on the weekly, of course on the daily and on the smaller time frames as well. So your best bet is an underside test with a continuation to lower price targets before we pick up massive demand. And of course we have to combine the price action and everything that's going on in the charts right now also with what's going on in the world from an economic perspective, right? We know that the data has been delayed. We've been extremely bullish still going into this month, anticipating decent data points for the Fed, and then QE starting, quantitative easing in December, which has been announced by the Fed, followed by rate cuts on December 10th, giving us an extremely bullish outlook for the month of December. Will it be the case? We don't know yet, but the good thing is that the data is coming in now. NFP is coming out. I'm sure in the next week or so, we will then also get the delayed CPI data and everything else that's been delayed. And then the Fed, then we will get a much better idea of what we can expect from the Fed in December. And then if, of course, on Polymarket as well, the odds go back up towards 25 basis points rate cuts, and we do see the 25 basis points rate cuts with quantitative easing going on at the same time, then that's a very bullish setup, not only for Bitcoin and the crypto markets, but for risk assets in general. And then historically, this is, of course, a very, very good time for investors to go risk on again and to invest in assets like Bitcoin and other risk assets. Right, guys. This was my comeback stream here, if you want, and this is what I'll be doing from now on instead of the videos that you're used to from the past. And this will be way more consistent. I promise you guys, because of course it cuts out a huge workload for me. If you're new to the channel, a special warm welcome to all you guys. Really nice to have you here. I hope you enjoyed the analysis. And if you did, you know what to do. Help me out here with the algorithm. Let's tell YouTube that I'm back as well and that I'm doing live streams. As I heard from some people at YouTube, this is what the platform likes the most. So this is what we're doing now. So yeah, guys, smash up that like button. Really helps me out with that algorithm. And if you want to see anything else here on the channel, or if you just want to say hi, drop me a comment down below. And yeah, if you haven't done so already, subscribe, notification bell, and don't forget the weekly data sheet that's coming out for you now. You can get it down in the description. The link is down there. All you got to do is drop your email. No payments, no nothing. It's completely for free. And this way you always have a clear overview where my head is at in every little areas, macro data to watch, the on-chain data that I'm watching, Bitcoin key levels, and then of course the average performance for the month for Bitcoin in the current month always. Here we can see, by the way, we haven't covered that yet, is that oh yeah, I got to show you the data sheet as well. I'm just looking at it myself. As I told you guys, I'm still getting used to all this live stream and all these controls and stuff. But yeah, we see on average, it's been a mixed bag here for November. So we can expect this to continue this way, as we can expect this to be another negative month now here for November. And then hopefully December continues to be a bullish month and we can see some more upside. And then maybe we get surprised that the script gets flipped and that we see the 50-week SMA once not indicate that the bear market is in and that we continue in this bull market. But for now, all the data, everything points in the other direction. And we really got to look out now in the charts to catch an opportunity to either exit the market or short the market. And only if we break those pivot points on the daily chart and on the weekly chart and can reclaim prior support, then of course the what was I saying? Not the pessimistic, the optimistic event would come into play. So guys, that's it for me for today. Like I said, I hope you enjoyed my first comeback stream here. And as always, guys, happy trading and see you soon.